Mhm.
And, where we are today in that journey is we're a $4 trillion asset class. That's pretty good for a new asset class. But if we extrapolate the trend rate of network adoption, we get to $100 trillion within 8 years. So we're only 4% of the way there. This
Only
is the biggest
4%.
trade So it's the biggest macro trade of all time.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Raoul Pal dives into the 2026 Playbook Dollar shifts, soaring debt, and crypto's big debasement trade. Let's join him and uncover what's next.
So I realized how important it was. And over time, it was a small part of my portfolio. By the time we got to 2020, I'd been invested, I'd sold out, and then I bought back into the panic in 2020 into Bitcoin. And I really went down the rabbit hole, started developing the deepest set of analysis and tools that exists today in Global Macro Investor based on this. And I realized that the central banks around the world were using a trick to manage the debt. And that trick was the debasement of currency via liquidity, whether it was the use of the central bank balance sheets or whether it was the Fed net liquidity measure using the Treasury General account, the reverse repo and the balance sheet, or using the banking system to absorb the bonds that they needed to sell. I realized the entire system was based around refinancing of these massive debts. And what that was doing is back in 2008, we had a debt jubilee. And as opposed to forgiving the debts, all the central banks forgave interest payments on the debts. That's what zero interest rates were. And it allows everybody to restructure their debts. And over the next several years, everyone restructured their debts to 3 to 5 years. That created a perfect 4-year business cycle based around the refinancing of debts, driven by liquidity. But when you look at it overall, the liquidity injections that come keep growing over time because the debt that needs servicing keeps growing. That was correlated 97.5% with the returns of the NASDAQ and 90% to the returns of crypto. And I suddenly realized that we've now got the single most powerful factor in all of investing that's ever existed, that everything is tied to this debasement of currency, where they print excess currency and it optically changes the denominator so the value of the assets goes optically higher. I also realized that also meant that our hurdle rate for our investing, we have to offset that debasement plus inflation. So we get to like this 11% hurdle rate for our investing. And then I realized when I put all assets together and looked at them, since 2012, there are only 2 assets that really outperformed. Technology, because every day is more digital than yesterday, or tomorrow is more digital than today. And that was doing about 18% a year in returns. So yes, it was compounding wealth. The S&P and gold and all of these things were basically in line with debasement, i.e. you weren't getting richer by owning them. And then there was crypto. And crypto was the fastest adoption of any technology the world had ever seen prior to AI. It was growing at twice the speed the internet grew at, and it was producing 145% returns over the same period per year, including 3 80% drawdowns. Mm-hmm. And so, okay, if everything's driven by one macro factor, we have this urgent pressing need in a highly indebted economy for new rails to operate within, then you only have 2 bets, which is the technology and crypto. And when you divide the NASDAQ by Bitcoin, it's down 99.97%. So you have the single most powerful macro trade of all time that offsets the debasement, that is an adoption of a technology for the new internet. And so I'm like, well, if there's any time to be all in, this is it. And so I went from being a diversified investor in global macro currencies, interest rates, commodities, to being highly focused on technology and crypto, with crypto being the single most important bet of all time.
Bitcoin's path to avoiding a deeper bear market rests on three critical factors: technical support, central bank liquidity, and U.S. fiscal stability. Despite the recent sharp decline that dragged BTC below the $100,000 mark, the bull structure isn't completely broken yet. The first key lies in Bitcoin holding above its 200-week exponential moving average, around $100,950. This level has acted as Bitcoin's long-term floor during every major correction since 2023. If BTC continues to defend this area, along with maintaining its weekly RSI above 45, it signals that the broader uptrend remains alive. The second factor centers on the Federal Reserve's quiet return to easing, what Arthur Hayes called stealth QE. With the U.S. running nearly $2 trillion in annual deficits, the Fed may be forced to inject liquidity into the system through its repo operations. This subtle money creation supports risk assets like Bitcoin, effectively boosting demand as more dollars circulate in the market. Finally, Bitcoin's recovery hinges on the U.S. government resolving its shutdown and restoring liquidity flows. Once Treasury spending resumes and liquidity returns, it could ignite Bitcoin's next bullish leg higher, marking the transition from fear to opportunity.
I didn't understand the debasement of currency at that time. We understood something was going on with the central bank balance sheets, that it was driving markets. We didn't really understand any of that. But my thought process was, at the time, Bitcoin was $200. And I said, listen, it's either worth zero, or this is the future of the entire financial system and everything will get recorded on blockchain. And then we know who owns what. And that was my simple thesis. And I said, listen, if I just use gold as the basis of understanding, I can impute it like a stock to flow, how much gold is above ground versus known reserves of gold, and do the same for Bitcoin. And I got, well, Bitcoin's probably worth $1 million. And that was when gold was like $2,500 or so. And I said, okay, well, let's discount me by 90% because I don't know. So Bitcoin's at least worth $100,000 and it's only $200 now. I said, this is the greatest trade the world has ever seen. And it proved to be so. And it's the same thesis. Is blockchain rails are the future of the financial system? I just didn't realize, because smart contracts weren't around then. But when smart contracts came out, well, it's the future of the internet as well.
Token burns sound exciting, destroying coins to make the rest more valuable. But in reality, price only rises when burns meet real demand, utility, and transparency. Token burning means permanently removing tokens from circulation, similar to locking money in a vault no one can open. In theory, less supply should make each token worth more, but that only works when people still want the token. Without strong demand, scarcity becomes meaningless. Projects like Binance's BNB show how effective burns can be when tied to genuine activity. Every quarter, Binance burns BNB based on trading volume and network usage, turning real ecosystem growth into measurable scarcity. The process is transparent, consistent, and supported by steady demand. That's what makes it work. On the other hand, Shiba Inu has burned hundreds of trillions of tokens, but seen little price movement because its total supply remains massive and demand has faded. The difference is clear. Token burns succeed when paired with real adoption and trust. Without those, they're just smoke without fire. A spectacle, not a strategy. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.